Jenny, yesterday market was up, and I have to say, there was something a little jarring, to say the least, about looking at the events in the nation's capital, while at the same time seeing that the Dow had remained positive by 300-400 points. And here's a follow through today. We can see you fine. I don't know where your framing is, but there you are.
Okay.
Your view of sort of why we are where we are.
So I got an email from one of my clients yesterday, and it said something like, gee, I guess the market loves chaos. And I wrote back, no, the market doesn't love chaos. The market hates chaos. We all know that. What we got yesterday was clarity. And we need to not, this is my favorite Bill Gates quote. He says, headlines in a way are what mislead you, because bad news are headlines and gradual progress is not. And that's what happened yesterday. The headlines misled us. I don't mean to downplay how terrible yesterday was, right? But that was negative, and it was the headline. And the gradual progress that we've made over the past year is unbelievable. We've done so much. We've done something that's never been done in the history of humankind before. We brought a vaccine to market within 12 months of the first symptoms of a virus. That's amazing. We had U.S. presidential elections during this pandemic. We are actually en route to a smooth transfer of power on Inauguration Day. And yesterday we had clarity. It might not be what people want, not what everyone wants. Some people did, some people didn't want the results that we found out yesterday. But the bottom line is the market doesn't care that much about whether it's a blue wave, a red wave. They care about clarity, and that's what we got yesterday, and that's what's important. One last note on that.
Sure.
It's easy to make the argument like, oh, but a blue wave is bad for business, blah, 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 regulation, taxes. The reality is that going back to 1951, whenever there's a Democratic sweep, the average return of the market during those all Democratic administrations is about 13%. So there's not a lot of history backing up any really negative case scenario right now. I think we look to the future, we look out a year, we see that things are getting better. We've made a ton of progress in the last year, and yesterday we got clarity. That's why the market was up.
Chamath, that speaks so well to a tweet that you had of 2 days ago, which says the following, and we'll put it up on the screen. Choose your own adventure. Dems win Georgia. Senate passes 2K stimulus. Assets keep inflating. Or Republicans win Georgia. Fed continues to pump money into stock and bond markets. Assets keep inflating. The point being, assets are going to be inflating in the near future at the bare minimum, regardless of what happens.
Right.
I saw some incredible data points recently in the last few days, which showed that personal consumer credit card debt had fallen off a cliff, which kind of makes sense, right? Because you were in the middle of a pandemic and you weren't going out as normal. On top of that, I saw data that showed that the amount of savings that individuals had gone up, and then the amount of money in money markets were at all-time highs. And so when you put those things together, it is rocket fuel for assets. And so whether those are housing markets, or whether those are capital purchases like cars or vacations or stocks, in this case, if we're still under a lockdown, these things are just going to go to the moon for a while. And so you just have to be long. And, everybody who's trying to sort of like understand why you shouldn't be long, I think is going to regret it for at least the next 18 to 24 months.
Josh, is it that simple?
It's been that simple for a long time. We've had a situation where really people are faced with this choice of earning nothing on their savings, but not potentially losing money in a correction. Okay, that's great. Or being invested, understanding that they're owning stocks at elevated multiples relative to history, but saying, so what? I have no choice. I'm not using this money for 30 or 40 years. I cannot earn zero on it, and I can live with the bear markets that occur. And to me, that has not been a hard choice. I've been on the show for 10 years telling people to stay invested. So I'm with Chamath. I don't think it's paid off to be the smartest person in the room who has the most wildly contrarian point of view and is shorting stocks in the second best bull market of all time. And if that's been the adventure that you've chosen, sorry. And it will change at some point, and maybe the thing that will change it will be different than all of the things that we thought would have changed it over all this time. Because every year there's a new thing that we're worried about. So, I mean, that's where I have been. The only other thing I would add to this conversation that I think is worth adding is you're now in a situation where you have a lot of areas of the market that have not performed in the last 5 years starting to look really good. really attractive. Industrial stocks, material stocks, very important. If we're having another globally synchronized recovery in international markets, which appears to be the case, and international economies, more importantly, these are stocks that are still selling at depressed multiples, where there's a lot of money that can be made. You don't have to buy a cloud computing company at 90 times sales. Like, that's not the only option on the table. So I think people should be invested. I think they should own equities all over the world. I think they should be diversified. And I think they should read less on social media and read more books and relax.